Communiqué of the 96th meeting of the Monetary Council of the Currency Union. And I will start with the main subject matters which were addressed. The first one relates to monetary stability. In this regard, the Monetary Council received the Governor's Report on Monetary and Credit Conditions in the Eastern Caribbean Currency Union for the period January to June 2020. The Council was apprised of the following. 1. In 2020, global economic activity is expected to contract by at least 4.9% as the world deals with the effects of the COVID-19 pandemic. Growth in advanced economies is projected at negative 8% in 2020 compared to a growth rate of 1.7% experienced in those economies in 2019. Secondly, as it relates to the ECCB economy, this has been severely disrupted, and it's expected that the economic growth will contract between 10 and 20% in 2020 before starting to recover in 2021. There are some key risks to the anticipated recovery in 2021. These include a delay in the global rebound, permanent job losses and business closures, natural disasters, and increasing credit and liquidity risk in the financial sector. Thirdly, monetary and credit conditions in the currency union deteriorated in the first half of 2020. That is, both the level of money available and credit extended decrease. This trend is projected to persist for the remainder of the year. Strong foreign exchange buffers as a consequence of the ECCB's prudent management of foreign reserves, coupled with financial stability, will support gradual improvement in economic, monetary, and credit conditions in the future. Having received the Governor's report and recommendations, the Council decided A. Maintain the central bank's discount rate at 2% and B. Maintain the minimum savings rate at 2%. 2. With respect to financial sector stability, the Council received the Financial Stability Report for the Currency Union for the period January to June 2020. And the key highlights of the report are as follows. 1. The COVID-19 pandemic continues to place significant pressure on the economies of the sub-region. However, the ECCB banking sector remains stable. The reduction in the ECCB's discount rate is expected to ease borrowing conditions for commercial banks and to help them support liquidity if needed. Commercial banks and credit unions are likely to experience a significant increase in default risks, market risks, and their liquidity risks. Turning to the framework for macroprudential regulation, the Council was apprised of the ECCB's work on articulating an optimal framework for the currency union financial system, given the urgent need for comprehensive and coordinated oversight, especially of systemically important financial institutions and adequate consumer protection. Turning to fiscal and debt sustainability, the Council was apprised that the total public sector debt of the region is expected to rise in both nominal terms and as a percentage of GDP during 2020. Convergence to the debt to GDP target set at 60% by 2030 will require substantial acceleration of growth and/or the generation of sustainable primary surpluses in the medium to long term. The Council lamented a reversal of the significant progress made by member countries to meet the debt to GDP target of 60% by 2030. At the end of 2019, the debt to GDP ratio stood at 65%. The Council recognized that member states will need to contract additional debt to fund critical support for their economies during this difficult period. The combination of economic contraction and the necessity of additional borrowing means a rise in the debt to GDP ratio, at least in the short term. Council renewed calls for more financial support from the international community at this time when the ECCU's dominant sector, tourism, is largely shut. Turning to growth and competitiveness, the Council was advised that 1. The outlook for the ECCU in 2020 had changed profoundly due to the COVID-19 pandemic. Real GDP for the ECU is projected to decline within a range of 10% to 20% this year. This is in stark contrast to the pre-COVID anticipated growth of 3.3%. Secondly, the economic decline is largely due to the decline in tourism. The recovery of this dominant sector is expected to be protracted, with performance unlikely to revert to pre-pandemic levels, i.e. before 2023. The pre-pandemic period, of course, will be 2019. The pandemic has resulted in a drastic reduction in jobs and incomes, lower government revenues, and elevated unemployment. We look at a program of action for recovery and resilience, and in this regard, we agree that COVID-19 pandemic offers an opportunity to unite around a program of action for making the region's economies more competitive, productive, and resilient. The program of action will include the following. 1. Enactment of modern insolvency and bankruptcy legislation to support the efficacious restructuring of businesses to protect jobs and to preserve financial stability. 2. Determination of the optimal regulatory framework for the financial system of the ECCU and the enactment of a financial stability framework. Thirdly, fast-tracking of the Caribbean Digital Transformation Program. Fourthly, the launch of the EC Digital Currency Cash Pilot with an early expansion to all 8 member states. Fifth consideration, the enactment of modern payment system and services legislation. And sixthly, enactment of all outstanding legislation already approved by the Monetary Council, including the important credit reporting bill. Turning to the matter of coordination for collective action, in the context of the significant challenges facing the sub-region, the Council agreed to convene more frequently to address matters of critical importance and to work even more closely with the OECS Commission. The areas to be addressed at the upcoming special meetings would include tourism, labor markets, digital transformation, business support, and, of course, the Citizenship by Investment Program. we receive a report from the Technical Core Committee on Insurance, and two entities, BICO and CLECO, were the focus. The Council approved a funding proposal of US $1.4 million to support the payment of outstanding claims to some 250 policyholders under the Policy Assistance Scheme, PASS, which was established in 2013 when Sagicor purchased the portfolio. The PASS was established to help settle surrenders, maturities, claims, and bonus payments owed to policyholders of BICO at the time of sale. With respect to CLECO, the Council was updated on the steps being taken to pursue and protect the interests of ECCU policyholders by pursuing an application under Section 60 of the Barbados Insurance Act for the winding up of CLECO International Life Insurance Company. These are the main conclusions of the 96th meeting. The Council is expected to meet for the 97th meeting of the Monetary Council in October 23rd, 2020. We want to thank again the media, and we are now open for your questions.